Hi everyone, welcome to Anthem Vault's YouTube interview series. My name's Megan Duffield, happy to have you here. And today we are interviewing the president of Windrocks Wealth Management, Brett Rentmeester. He's appeared on PBS, in the Chicago Tribune, and several financially focused blogs like The Dollar Vigilante and ZeroHedge.com. So thank you so much for joining us today, Brett.
Thank you for having me.
So I wanted to get started before we get into the meat of what we're going to talk about today. I'd love to know what was the intro for Sound Money to you? What really got you interested in Sound Money and opened your eyes?
Yeah, it's a great question. Well, I've always been interested in history, and in particular financial history, which a lot of people today have forgotten. And I think maybe my first exposure to it was reading a book, The Creature from Jekyll Island by Edward Griffin, which is a history of the Federal Reserve. But it goes into a deep history of the monetary system of the world and the different experiments and failures. And it's a real eye-opener that we've been here before playing these experiments and sometimes with very dangerous endings.
I've personally not read the entire book because that is quite the verbose piece of work. But I am familiar with the story behind it and have actually got to meet Griffin before, and he's just a delightful human being and very intelligent. So that's obviously a great start, and I'm sure a lot of listeners can relate to that book as well as being their first real intro into sound money and liberty and things like that. I wanted to get started with talking about one of the top commodities when it comes to Anthem Vault, and that is gold. And there is a culture behind gold, and a lot of people seem to be flocking to this metal. And I want to get your perspective on why you think so many people are interested in gold.
I think you have to start answering that question by acknowledging at the front end that not everybody's interested in gold. And I think there's two camps out there. I'll call it the mainstream investment community in one camp, and maybe the independent market observers, ourselves included, in the other camp. And before I describe what the independent market observers like ourselves are saying, I think it's helpful to think about why the mainstream doesn't see the value in gold or hasn't really endorsed it the way many more astute investors have. And I think it's really based on two main items. The first is, I would call it a misplaced belief in the Fed's outlook and storyline. So if you believe, what central banks are telling the story today, yes, they acknowledge subpar growth in the world and too much debt, but they kind of guarantee us that an exit plan is out there and everything's going to end up okay. So anybody, that really looks back, whether it's the Fed or other central banks on their forecasts, realizes they've got a terrible track record and they've really missed all the major inflection points and bubbles. And so they're really not in the business of giving accurate forecasts for investors to look out for big events. And yet, that being said, there's this blind faith in central banks today. The second part of the equation is somewhat where we started, Megan, which is the forgotten history of gold, I'll call it, that just too many people haven't looked back at their own history, especially in money itself, which is so fundamental, and aren't even aware of this historic break that the U.S. dollar had under President Nixon from the backing of gold in 1971. We've lived in this world of fiat money for so long that people really don't remember gold being this key tenet to the monetary system. And in fact, when you think about it, you would have had to be a young adult in 1971 to remember that era well, which would mean you're in your mid-60s today. So for everybody else, unless you've done your own research and homework, the concept of gold as a key tenet to the system is a distant memory. And yet, a couple stats that I think are important from that period. Since that break, essentially it gave the Federal Reserve an open checkbook to print money and take on debt, which we've done sitting here today to the tune of $18 trillion of official debt and another $70 trillion of unfunded liabilities. So when you add all this up, where we sit today is at about $87 trillion of money that we actually need in the bank today to meet our obligations. And to put that in perspective, that's over 5 times GDP, and it really dwarfs our annual tax receipts, which are $3 trillion a year, which are the source to repay those. So that's the mainstream point of view. The independent market observer point of view sees it very differently. They see a world awash in central bank manipulation, money printing, and currency devaluation that's highly unlikely to end well. And of course, this is on top of record debts and stagnant global growth. And the basic insight here is the more artificially distorted you make things, the more risk lies ahead. So, our belief, and I think the belief of a lot of people buying gold, is that central bankers are somewhat boxed into a corner right now. They've created somewhat of a house of cards of debt that can really only be maintained by sustaining a low-rate environment, and they do that by printing money and suppressing interest rates and keeping borrowing costs low. Well, at some future point, that may break. And when that breaks, we could see the pendulum shift to the other extremes, which could include high inflation and higher interest rates. But that being said, we keep telling people don't be shocked if we see this slow drift down in rates continue on global weakness first. So if you believe in the risks in this world, people look for assets that not only hold their value when you print money, but are not liabilities of another counterparty if confidence is lost. And further, they look for things that have tangible value around the world. So precious metals, mainly gold, really fits the bill.
And on that point, what are some economic scenarios that you do see ahead, and why do you see gold fitting the bill as a good asset to hold on to?
Yeah, well, we've given a little overview of those. I think if you were to ask us our most likely scenario, we think the likely path ahead is that the world continues to sputter economically for growth, if not outright contract, because we've taken on so many obligations that we're really not able to meet through normal economic growth. The more the world sputters, the more we think central bankers are going to be motivated to print money and try to paper over that slowdown as we've seen in the past. At some point, we think all of these forces add up to leading towards a heavy devaluation in paper money of all sorts. And in this environment, gold could really soar relative to depreciating currencies. However, again, just as a caution, a truly soaring gold price probably means we're at the end of this era of central bank control. So there is some patience involved with this. However, there's another extreme. The other extreme would be if central banks' plans to kind of reinflate the system and paper over things don't work, or people start losing faith or pulling money out of the system, you could end up in a world that looks a lot more like 2008, where people don't trust assets, people want out of the system. And a couple startling facts in that regard, Megan. When you just look at the U.S. today in the banking system, there's about $13 trillion in deposits. The FDIC has an insurance fund that only has $48 billion. So we know that FDIC insurance, much like Social Security, is more of a concept than it is a true pool of assets there to protect you. And yet the banking system has derivative exposure today of $300 trillion. And based on some complexities in the current bankruptcy law in the U.S. and the Dodd-Frank legislation, we believe bank depositors are sitting as unsecured creditors to banks. And in a worst-case scenario, they stand in line after derivative holders or the Wall Street powers that be. So we're not saying that's going to play out, but in a scenario that does play out where people get concerned about the system like '08, bank depositors and people in the system, their rights aren't as strong as you'd want them to be. So again, gold is a way to have something outside the system that really nobody can just take away easily. Of course, there's scenarios in between those two, but I think those are the extremes. And at the end of the day, we believe gold's your best friend for the extremes.
Mainstream news outlets have been talking about they're very negative on gold. They're talking about worst year ever for gold. If you live in the U.S. bubble, sure, maybe it hasn't been the best year for gold in a short-term sense, but worldwide, gold's role around the world has been pretty great, and performance has been well. And I would just like to get a little insight on how you view gold at Windrocks. What is gold's role?
Right. No, it's a great question. I think gold and silver, to a degree, have somewhat of a unique role. We think of them as money, as something that will retain your purchasing power over time, irrespective of what central bankers do. And in fact, one basic relationship we believe in is that gold's value is somewhat proportionate to the amount of paper money in the system. So if you step back and you see a world ahead where you believe they will continue to print money, continue to expand the money supply, we think it's a very strong bet that gold and silver rise dramatically during a period like that. Now, it could be suppressed. There could be, different periods of frustration, but in general, we think those two follow. So we view it as money, and in that respect, it's fundamentally different to us than stocks and bonds, which tend to be more of a speculation on an economic path ahead. I mean, gold is also, it's a commodity, a hard asset, but we put it in its own category because, quite frankly, it behaves very differently than most commodities in the extremes. Most commodities, not all, but most are highly economically sensitive. So if you think of oil, oil may do great in a high inflation period, but it may get crushed in a deflationary collapse. So gold's kind of unique in that it gets a strong bid when people are losing confidence. And losing confidence, again, could mean losing confidence in the paper money system and worrying about inflation, or losing confidence could be mistrust of counterparties and your money in the banking system. So in that regard, gold plays a very special role that's different than most commodities. We don't really buy it viewing it as a tradable currency. We really think of it just kind of as money, but a money with no counterparty, with no liabilities attached. And given the economic, perspective we laid out, it's a patience game, but we think you've got to start building a position for, some of the risks ahead. I mean, there's a couple different ways we tend to own physical metals or metals for our clients, but I think at the core of it all is kind of us advocating owning the physical metal in hand. For a lot of people, this might mean just accumulating coins at home, which we think is a fine way to do it. You do hit a point where you don't want to become a robbery target or worry too much about, a fire hazard or something else that could, damage the gold. So beyond a certain point, we strongly advocate third-party vaulting services, such as your services, where you're storing it at a third party, but it's titled in your name and it's outside of the fractional reserve banking system. I guess that's the key. If you're going to go through all the steps, we believe you've got to either have your hands on it physically right now or have it in a vault in your name that you can easily get access to it as a core tenant in a gold and silver portfolio.
Right, because everyone has to abide by these laws such as the Patriot Act and things like that. However, if they're not directly associated with the government, you have that extra layer of protection there.
Right.
So I would love for the audience to hear more about what you're all doing at Windrock Wealth Management. You guys are definitely set apart from typical wealth management companies. I came across your business through the Liberty and Austrian economics community. So if you don't mind sharing a little history behind the company and what some of your missions are.
Sure. Let's start with what the wealth management industry is. And unfortunately, a lot of the wealth management industry I would characterize as a Wall Street sales machine. Big banks, big brokerage firms, you're dealing with people that are good with clients, but they're not the people that do the research or have their hands on the investment details. They're really salespeople. And further, what they're selling is often not in your best interest. So there's still a culture of a lot of misaligned incentives. So we've been in the business, approaching 20 years through a couple different iterations. And Windrock was really formed with kind of two main tenets. The first was to have more of a macroeconomic point of view because we felt like so much of the industry, irrespective of the environment, they would come up with a very similar allocation for clients. And it generally was, heavily skewed to the stock and bond and hedge fund paradigm. We think, we've had an incredible tailwind for stock and bond investing because interest rates have fallen, for 30 plus years, but we're nearing the end to that. So we wanted a model that based decisions more on the macroeconomic realities that we just talked about and looked at it through the lens of a more free market Austrian economics, which is rare. The second tenet is we're entrepreneurs and we have much more of an entrepreneurial mindset. And so oftentimes we're finding investments in areas that the mainstream isn't. And, we have to be careful because sometimes when people hear the word entrepreneur, they think risk. But in our view, entrepreneurs are actually skilled at assessing risk and navigating it. And so for us, beyond gold and silver, we're doing things in rental real estate, in farmland, in unique collateralized lending, in some niches that we think will protect people and be a hedge against some of these future forces, but are a way to make money today. Now, we do some stock and bond things as well. So you've got to still look at things kind of holistically. But, I think that's our storyline, and it makes us, very different. I don't want to say we stand alone, but we're an apple amongst oranges. Our website is www.windrockwealth.com, and it's got our contact information on there as well as all of our research and analysis. We make that all available. So if someone would like to just kind of follow our work, see some of our thinking, I think that's the best way to take a peek.
On the Windrock Wealth Management site, they've got some excellent articles about gold, about the current financial situation we're all in here. And I did want to talk a little bit, just now that I have you, about the world of advisors and financial advisors right now. I think the audience would probably really love to hear a little bit about this industry in general, because much like all the other industries around the world, there has been a rise in automating and decentralizing almost individuals' investments with things like Robo advisors. So I just wanted to get your take on it and see what direction the advisor industry is going.
Yeah, you're right. I mean, there has been, I think, a big step forward in what you're referring to as robo-advisors. I'd call it technology tools that allow people to manage their own money. And I think, as I said earlier, a lot of people have had bad experiences with the wealth management space because of its Wall Street sales mentality type dominance, and they have chosen to take things into their own hands, which is fine. But, the other side of it is the right kind of advisor, I think, can add a lot of value, because ultimately what you should be paying for in an advisor is judgment. And so if an advisor is just, kind of keeping you down the middle with the herd, and every 5 to 10 years you fall off a 50% cliff like the stock market's done, and their response is, well, no one saw it coming, or markets are efficient, we think that's a pretty cowardly model, and it probably doesn't make sense, to have an advisor. If you have an advisor that's applying real judgment, that's a different story. So real judgment is hard, though. It sometimes goes counter to your natural emotion. And real judgment would say, boy, you make your most money through a long period of time by buying into distressed prices. But the only way you have the guts to buy into distressed prices are if you can kind of get defensive near a market top and not be clobbered with everybody else. Because in my experience, whether you go back to 2008 or the tech bubble fallout, anybody that felt the pain on the way down at the bottom, even though they knew they should probably be buyers, they weren't able to buy because they'd felt too much of a loss on the way down. So if you can reverse that psychology, the right way to invest, although it takes patience and fighting your emotion, is when things all look great and everybody's complacent, you've got to be very concerned. And when the things are falling out of bed, you've got to be willing to play offense. So I think whether it's us or any other advisor, you have to judge people on their ability to have an economic outlook and apply some judgment.
Right. And I bet I can guess what the staff at Windrock is on the Myers-Briggs test, at least on the last letter, I'm sure. So, well, this has been wonderful talking with you today, Brett. Is there anything you'd like to add, any special events you all have coming up where you'll be attending and perhaps people can meet up with you and chat more about your services?
We will be at Freedom Fest in Las Vegas this summer, talking on a couple different topics. Chris Casey, my colleague on Austrian economics, and I'll be giving a presentation as well. So anybody that happens to be out there, please stop by and say hello.
All right, wonderful. Well, we'll see you there. Anthem Vault will be in attendance as well. Thank you very much for your time today, and looking forward to speaking with you again soon.
Great. Thank you, Megan.